was pre-crisis. On the whole, the panel has been quite, I would say, optimistic on that issue. All of the speakers refer to the scope for further expansion of trade between developing countries and the BRICS economies. Harry proposed to drop the R, so BRICS, but then somebody wants to add Indonesia, so BICSI, whatever it will be in the acronym. There seems to be a lot of consensus on that will be a very dynamic part of the world economy. This will be dynamic markets, and the opportunities for these dynamic markets are very wide, both within those few countries, but also for other developing countries. That's a very major point. When we started thinking about this session, we were wondering whether the exchange rates, instabilities, and realignments would be a major obstacle, or whether other problems would sort of erupt, like food security. Now, exchange rates have not been mentioned as a major issue, interestingly enough, even though it is a major global macroeconomic issue in terms of the global imbalances, which the Chinese rightly raise at many occasions. But it didn't come here as a major issue. That's quite interesting. But food security was specifically mentioned by Ambassador Singh Bhatia. Dr. Pengestu, she talked about, again, in that sort of optimistic frame of mind, a costless recovery, a costless stimulus through trade. And we are in the rebound. South-South trade is the new dynamics. There is a reorganization of the international supply chains going on very rapidly. It's no longer flying geese. And countries will have to find their particular niche within that situation. There are obstacles, for example, hopelessly complex rules of origin across different kinds of regional trade agreements, and this needs to be addressed. There needs to be greater transparency about RTAs and PTAs and the kind of small prints under which they run. The minister from South Africa also confirmed that we are seeing new growth poles, and he related that in his particular country's case, exports to China and India had actually grown during the global financial crisis. And he emphasized the need, but also the willingness of buyers to look into questions of value addition, not just continuing to export, as he called it, dirt from under the ground, but also constructively cooperate through perhaps investment, joint investment, etc., through other mechanisms into value addition, accruing of the benefits of which accrue to the producing and exporting economy, balancing also, he emphasized, between export development and export growth on the one hand and domestic growth on the other hand. Harry Broadman, in addition to his provocative comments about changing the acronym, emphasized that he sees in his work a great deal of resilience on South-South trade. And Africa, for example, has experienced a long run of real growth, and FDI is in a way not yet quite waking up to that. There are issues of business environment, there are other issues, but South-South protectionism is also remains a major obstacle to fully realizing that potential. And he called, and he said an opportunity is there in the G20 meeting forthcoming in November in Korea, with Korea in the chair, to call for greater transparency in these areas. Our Chinese participant, former Vice Minister of MOFCOM, related how fast imports into China have been growing, also including during the crisis period. And he predicts an outlook for imports which remains very, very rosy, and indeed would provide a great deal of opportunities for suppliers. China itself is developing its brands, it's targeting high-end markets, it's looking at capturing some of the services trade, offering outsourcing services. Indeed, China also wants to go into creative industries and a number of the other emerging fields that were mentioned. And again, a very, I would say, upbeat account of opportunities. This was also emphasized, re-emphasized by Ambassador Singh Bhatia, who talked about the changes which are quite fundamental, and they are not because of the financial crisis. They are driven by underlying productivity changes in economies such as his own country, India, but also China and elsewhere. There's a lot of dynamics that can be captured. And of course there are risks. One risk is that, of course, the previous boom was essentially debt-fueled, largely in some of the mature economies like the US, and that is no longer feasible. In fact, the debt levels are probably close to a maximum and may affect a number of economies like the US or the UK quite significantly. But that doesn't change the dynamics of growing opportunities in the BRICS regions. The implications are for the value chains. These value chains are fundamentally taking a different shape. And as Dr. Mari Pengestu from Indonesia mentioned, it raises the question what kind of public involvement and possibly governmental regulation needs to be thought about in the context of intra and inter-industry trade. To what extent governments have a facilitatory role in that area. Ambassador Bhatti also emphasized the need for managing investment flows in order for investments to facilitate investment, but at the same time not to disrupt domestic or local and domestic policy frameworks. Regulatory challenge relates to greater predictability, and he called for the multilateral trading system to address these issues, including completing the Doha round ASAP, if that's perhaps an incomplete but fair summary of what you said. We at ITC also know that. We know that there's a very clear and major link between export development, export growth, and poverty reduction. The research we'll be presenting later this year in our new publication on market access, transparency and global fairness in global trade will identify very clearly the importance of exports driving poverty reduction, especially for low-income countries. There's no other option. Bismarck said export or die. I don't want to go that far, but it's not that far removed from that. If perhaps at a middle income or at a higher income level, such as a country as China, there may be opportunities for reducing poverty by redistributive policies or social insurance and safety nets. But at the lower income level, it is the mechanism to create the value, to import, to finance infrastructure, to finance social infrastructure, etc. And it's a very important point. In the Q&A, a couple of regulatory issues were raised. I will not try to summarize these in great detail, but I would like to emphasize that this is one of the issues we'll be discussing in some of the subsequent panels, in particular the voluntary standards issue and the private standards issue. Is there fairness? Is there sufficient transparency? What is the impact of those standards on opportunities for trade for the developing countries? It's a very important issue. What do the big players do to encourage value rather than volume in trade? Mr. Wei from China gave a very pragmatic answer, characteristic of the Chinese. He said very practically, well, you know, if we need to go to Japan, we get a Japanese expert to tell us what to do, and then we do it. So I think that is characteristic of the pragmatism of Chinese export development, which has really brought them very, very far. Today, you know, if you were in 1980 here in this country, the odds that your family would be below the $1 or $2 poverty line would be something in the order of 80%, 8 out of 10 households. Today it's less than 2 out of 10. So we see that this has really had major, major impact from a social perspective. There were many other issues, but I do not wish to endanger your food security because lunch is next. And I would like to pass back to Phil. Thank you.
Thanks very much, Wilhelm. It's only left for me to get you to thank the panel very much for this session. Harry, if you want to get away, you can get away. Also, a couple of little housekeeping notes. People who have not signed up for company visits should do so during the lunch break at reception in the lobby. Lunch is now served in, I think it's the Spice Restaurant on this floor, or Bamboo downstairs where you had breakfast. And back here for 1:30 for the next session. Okay, thank you very much.